Hello guys, we should be on live from the trading room. So hi everyone, happy to be with you today. And yeah, let me know if you see me, if you hear me as usual, and yeah, say hi on the chat. Yeah, I think everything should be properly connected. So we're gonna start a session. A lot of interesting movement in the market. I've been trading in the morning, the dollar especially. We had let's say we made an analysis together on Monday on the weekly forecast, and yeah, I've been focusing on continuing with what I think about the market and so on. And yeah, I will also try to manage the trades I already have, maybe take some other trades to continue the way in the dollar. So let's move directly into the dollar index. I want to show you something, guys, that I've been talking already on Monday for people that were with me during the weekly forecast. And it's quite interesting, and I also think it might be the switch between a from a risk off to a risk on environment, and I will explain why in a minute. I will try to continue my explanation that I made on Sunday. So yeah, let me give me 1 minute putting the dollar index chart. Okay. Yeah, I see some. I see some people already on the chat. Thank you guys for answering me and for saying hi. I see a lot of our traders here: Thomas, Nikolai, Daniel, Bob, Just One, Eric. Hi everyone. Thank you for being here with me today. So yeah, let's dig into directly the dollar index. That was something I looked for last week, not last week, this Monday especially. And here we breaked out. I think it was already which date we are today? The 18th. Okay. So I was looking for a breakout already on that space. Okay, on Monday we breaked out. We made a retest. We continued dropping down in the dollar. And the main reason is, I don't know if you know, guys, but all this movement on the downside is because the Europe and the ECB, the European Central Bank, want to increase their interest rate. So you know, until now, we know that there is huge inflation in Europe, but in all the world in general. The fact is that the US have already increased their interest rate maybe 2 or 3 times. And they are expecting to increase the interest rate even more than that. The fact is, in Europe, they didn't do anything. Okay, they didn't increase interest rate. They didn't try to battle the debt and try to battle the inflation. So that's why you see, until now and until today, that the euro dollar and the pound dollar, for example, is dropping down. Okay, when the ECB, the central banks in Europe, announced that they probably increased the rate. The dollar get down directly because the euro and the pound and other, I think it's the euro and the pound, so that the main two, euro and the Swiss also. No, sorry, the Swiss is not in Europe, but in the European Union. But the euro and the pound give a good push in the top side, and that's what we have here right now. I've been looking for as well. This long consolidation zone here. Okay, so you see here in a minute. Okay, we had a long consolidation zone. Okay, the dollar didn't succeed to break down below, and actually we are only testing this movement. It especially also happening in the dollar index. Okay, in the euro dollar. Sorry, in the euro USD you will see also that actually the market is battling at that spot. Okay, on the H1, on H4, we see clearly that we start to make a bearish momentum. Okay, so it's not only short time frame but also H4 and daily chart. Maybe if you go to daily chart, we can understand that the market already dropped down from here, and I expect the next zone to reach to that demand. Okay, at least. And what we found until here is that if I go to the H4, the market is reacting to a mid-range demand. Okay, so the market was reacting especially to that demand, and on lower time frame create, you see, a consolidation zone. Actually it breaked. Okay, there is a lot of volume, lot of volatility. Actually the market break up this huge zone, and actually we are rejecting the breakout. It looks like a fake out on that side. So yeah, this was quite interesting on the dollar index. What I did earlier, when I see that the market breaked out, I have in my mind that the Europe and the central banks in Europe want to increase their interest rate. I know that the dollar is already overextended, as each Monday we repeat the same thing, that for me at least I won't buy the dollar at that time. Okay, I won't be long in the dollar index. So I want to try and find opportunity where I could, expect a huge down movement in the dollar, and especially the movement and the opportunity was in the euro and in the pound today. So right now I already had some position. Okay, so if I go to the euro dollar, okay, you will see here on the M15, for example, okay, this consolidation zone is exactly what we see on the dollar index. Okay, this zone, sorry, I want just to show you the zone that we had. I just want to get rid of that. Hi everyone, I see a lot of people coming in right now. Okay, this is the 15-minute chart. I will put this zone and this zone. Okay, that was the zone where we actually see the dollar here. Okay, so you see the dollar here in consolidation in the M15 chart is exactly what's happening here. Actually, we turn down. Okay, we break out, fake breakout, we reach the bottom of I think it was yesterday, maybe Monday. Okay, at beginning of the week, we touch that zone and then we react. Okay, and that's especially what I did. Okay, I look in the euro dollar. I look at the top here. Especially I try to compound my entry. The market even dipped down below. I was ready on M5 to get any return. I already took some good lots here. I have a huge exposure. I will already exceed some of my position again in the range, but what I expect from here is breaking out this zone. So that's what I expect from here. Huge volatility in the euro dollar. It's quite the same in the pound, guys. The pound is a bit weaker because it's actually reacting to that zone. Yeah, so I might exit some trades as I'm overexposed right now. I will probably close some of my trades here. You see on the pound, we are exactly testing the bottom of the earlier session. So I will still keep my position. I have an interesting risk reward already. I already removed my stop loss very close to the low. I expect the market, if it gives a leg below, the market will continue to grow. So we will continue to monitor that trade for today. I think it was a nice entry, to be able to identify this type of fake out. You go to the dollar index, you get the top of that spot. This was actually a very high plus signal in my side. Okay, and we are still in the trend. Okay, if I go into H1 or H4, actually this is 1 in the Euro USD. Actually we moved up to 1.02, and the trend on the H1 is, you see, uptrend. Okay, the market already succeed to make a higher low. Okay, so we higher low here, a low here, a low here, and actually this was the low of today. I hope this will hold, and if it's all for today, we're gonna have a breakout above that area. So this is what I'm looking for, and also this area is especially at this zone from here, that the exact same that we see on the dollar index on the H4 charts, which is this demand just here. So we go into that trend. We have to monitor the trade. At least it can also be a retest, okay, of that breakout of the zone. So I will also exit some position here, especially my 50% of my position already here, as it's, you know, can be a retest from the last zone we had until yesterday. You will also see here the low actually testing this zone. So I'm quite happy to exit some position here. But again, I expect the market to reach and enter the zone again to make a breakout on the upside. And yeah, I believe that's already a good trade. Yeah, so you see the euro dollar is very, very strong. Let's say the euro, probably because of the ECB. The pound is a bit more struggling, but again, if we see a huge movement like that on the euro dollar, on the dollar index, you know, I believe that in the indices, and I will also add here the daily change, okay, to understand what's happening in the S&P as well, okay. I believe that we are actually switching from a risk off to a risk on environment, okay. And we should be able to get that. But here on the S&P, we are still, you know, battling with the top we make, you know, a bit of breakout, not strong. The market will open in 15 minutes. I believe that the opening will be very interesting. You see, we have already in M30 this uptrend. So the market can, you know, come back again to that spot to attract some buyers. You see, this probably will be a good spot for people that want to enter the market today in the long side. Maybe not now because we are in a huge supply zone in the H4 chart. But if you look at the high here, the market already break out above. The market will probably make a touch here at the opening. I think that's what we will do, probably on the S&P. So let's start 15 minutes. We will rate the opening together. I hope we can have a dip lower into that zone. And then we will try to make some buy position on that spot. I believe that might be the great spot for me to enter a buy position. So I will put the S&P still here. Regarding risk on and risk off, Enrique is asking what is risk off and what is risk on. In all the financial world and financial market, we have a term talking about risk off. Okay, when you are in a risk off environment, that means that banks, traders, investors, hedge funds don't want to take some risk in the market. And when they don't want to take some risk in the market, they don't want to be exposed to risky assets. Okay. What is a risky assets? Stock market is known as a risky assets. Oil is known as a risky assets. Crypto is known as a risky asset as well. And during the COVID and when we talked about recession and when we talk about inflation, market went to a risk-off environment. Risk-off means traders and banks don't want to be exposed to risky assets. And when there is a risk-off environment, traders go to the dollar. They go to the gold, for example. The gold is quite a bit different because we see gold dropping down a lot from the beginning of the recession period. But yeah, it's generally dollar, it's generally yen. Okay, the yen is also a bit complicated because the yen is very depreciating against the dollar. But a risk-off environment is when investors and banks withdraw their investment from the stock market, from crypto market for some hedge funds that want to put themselves in crypto, and also oil. Okay, what's happening in oil also is very interesting. I don't know if you follow the history in oil, but Russia, let's say in energy commodity, most likely Russia cuts actually the supply of gas to Europe. Okay, I think today or maybe yesterday there was a news explaining that Russia may be resuming their supply of gas into Europe. So there might be that the energy crisis we had in Europe is quite finished. So there is a lot of small signals that told us that are actually telling us that the stock market can be starting to move up already, and that's what we did, I think, on already. We had I think the market stands to that spot. Okay, when we talked Monday, the market yesterday make a 2% a movement up. I hope today we're gonna break out. I already made some explanation and my analysis on S&P, on Nasdaq. I believe that if we break the 4,000 level on the S&P, we're gonna move from a bearish momentum into a neutral momentum. Okay, so this is my opinion. And also the same, I don't know, guys, if you follow crypto, Bitcoin, Ethereum, all that stuff, okay, is moving up, is very correlated with the Nasdaq. Some people want to come back again into risky investments, and that's what we see today. The dollar starting to push down. And I was a trader, guys, in commodity. Okay, I traded commodity for 1.5 years, and I was looking and very fascinating by oil, wheat, soybeans, and stuff like that. And I'm still, following the price of that assets. And generally, when we had, I don't know if you remember, we had like a food crisis when the war between Ukraine and Russia started. Okay, there was a food crisis because Russia and Ukraine are big exporters of wheat, which is bread, which is pizza, which is pasta, guys. So I was very interesting by looking at the wheat chart, and this chart was for me the indication of about when the crisis will end. Okay, and have a look. I will just share the chart of the wheat. ZW is the future of wheat. Okay, I already show you this chart, but when the market, the wheat, and it was the same in soybeans as well, the market went up until that spot. Okay, and this actually zone was the top of 2008. Okay, so the market go into that zone, okay, make several tests here, and then get down. Okay, when I understand that all the food market, especially wheat and especially soybeans, okay, especially here, the same on soybeans, went down from the top, I say, okay, this might be the switch between the risk off and the risk on environment. We might see indices starting to understand the concept and moving up. And yeah, this was for me a big signal. In the Pandora, it's also, you see, reacting to the bottom we already test just before. So yeah, this was for me the good indication. I wanted to say something, I just forget. Let me remind again what I think. Never mind, it will come back again. I just forget. So yeah, let's read the opening in the S&P. We already had here a zone that's created. I believe that the opening will bring some movement, volatility. I hope. I don't want to be overexposed. I already have position in the dollar, but on the S&P, especially in indices, if the market gives a deep down, I will open a buy position at that spot. So that will be my spot for the day. If the market continue to go and continue to push, it will be without me, but you know, I already have a swing portfolio on my side. I'm long already on stock and indices. Yeah, something I would like to remind, how what I'm making and the analysis I'm doing, the trade I'm taking, the explanation I'm giving to you guys is only for educational purposes. Be careful of the risk by trading, and of course, if I can give you an advice, be careful in risk management. Okay, this might be risk management is the main thing that will leave you alive in the long term. Okay, and as a trader, you want to be living in the long term. Okay, you don't care to have like a big winning on one day and then losing everything the day after. So you want to be consistent, and for that you have to create and build a risk management plan. Yeah, I remember what I wanted to say. If you guys already checked the VIX, and this was also something interesting that I would like to share with you guys. Let me know on the chat if you understand my point and my analysis and my view. Maybe this might be a bit advanced. I talked about commodities. I talked about why not the VIX, risk off environment. I believe that most of you guys are probably trading with the 5ers, and you know, we have already some experienced traders on the chat, so I feel comfortable discussing about those aspects on the market, and not only technical analysis, which, you know, everyone has his own techniques to enter the market, but I like to bring the fundamental vision into the market. Okay, if you see actually on the VIX, this was the peak in 2008, this was the peak in the COVID, and when the stock market starting to go down, let's say 30% from the high, okay, if we go to MT5 and then we look at the S&P and we go to the daily chart and even the weekly chart, okay, this drop here, okay, it was very volatile and very fast. The VIX was at 80, okay. Today we almost lost we are almost the same. We like 30% from the top. It was the same in the COVID. The VIX, you see, is at 24 actually. Maybe when we bottom, it was at 35. There are two main explanations. The first one is because the market went down very slowly. Okay, so that's the first explanation. And the second explanation is because the market in stocks was overvalued. The market understand that the cycle need to change into commodities, and when the market already started, you see to actually push here, we see oil reaching 120, we see wheat, soybeans, all those commodities pushing up. So there was a big gap between the commodity value and the stock value. So this is the main two explanation. And in myself, okay, when I look that the VIX was not overextended, okay, I thought to myself, okay, maybe the situation in the stock market is not bad. It's not bad at all, okay. Maybe some banks and some traders will say that it's the worst case scenario, there is big recession, the market will drop again. But generally, you know, I'm feeling I believe in my feelings. And sometimes to trading you have to feel a little bit the market. Yeah, so you know, all those discussion about the bear market, I've made, I think, a very interesting podcast with Michael and Alex that we release on Trade the Pool YouTube. So yeah, you can guys look at the Trade the Pool YouTube, look at the video. We provide some great contents, and I explain a little bit my view into this bear market actually. What do you think about gold? Still short on H4 and daily chart. Okay, let me check. Gold, I I think on Monday I explained that I didn't want to put myself into gold because by bringing my fundamental view in gold, I was only looking for buy position. I think I was already buying some position. You see, into that approximately line, I bought here again, and then the market dropped. I take some losses here, but I believe that gold will continue to grow because there is a huge inflation, and when there is inflation, gold tend to grow. Yeah, inflation and risk-off environment. When there is a risk-off environment, investors want to hedge themselves into a gold market. So that's the thing. The fact in gold is that I have a more wide view into this market. But when I see actually this huge support, okay, on the weekly chart, it actually support the market from 2020, March 2020. I wouldn't, expose myself into a short position at that especially spot here. Okay, this is my view. So this is a weekly view, but also on the daily, I'm not a trader which expect to break out. I don't like to expect to break out. That's not what I believe in. And here already we see that the market started to give some support at least. Okay. The market is still on a bearish momentum, but when gold will start to rise, it will explode on the upside. And I don't want personally in a long time scale being short here. And also from a fundamental view, okay, from a fundamental view, I don't want to be short in gold. So that's my view. I know that some traders expect to break out on the downside. This is not what I expect, but we can have different ideas, divergence ideas, and this will still be interesting. So yeah. But yeah, there is some space to go on the downside. There is still some place to go on the upside. If I would do something, is only trade to very short time frame. Generally, when you have this type of range here, it's very good for some scalpers, some day traders. Okay, you can have like you have another support at the bottom here. You have already some support here. So it's this type of momentum. When the market is on a big, support and demand zone, you can like play with short scalping into lower time frame. But yeah, that's interesting. Yeah, you're welcome, and I hope you appreciate my feedback. I know I have a different view, but the market can still give a deep down and you will be profitable on your trade. It depends. And something very interesting in trading is that I can be long and you can be short at the same time, and we can both winning and we can both losing. Okay, it all depends about how you manage your position. So it depends where you entry, what the risk percentage you take in this trade. It depends of your psychology at the time. It depends about a lot of parameters. So yeah. I think I will already here maybe put my start a trailing stop on the pound, on the euro dollar. Okay, so I would put my stop loss above my entry point, and in pound is quite a bit different. I will let it continue. It's already break out that zone. I need to have a better confirmation, but yeah, the stock market is open, so let's maybe concentrate into the S&P, and let's see if we can have a dip into that zone to open some buy, or at least maybe having a reaction. That's actually what I want in a short time frame. Actually, the dollar is moving up. Let me put back again the dollar index chart. I think it's gonna be here. We might test again this support. you see the market already made a lot of accumulation into that zone. So I believe, I hope at least, to have a breakout into the downside for my position. But yeah, let's monitor that here. The fact is that I remove my stop loss into break-even in euro because we had here an accumulation, we are in the uptrend. If the market start to make another test here, okay, there might be a chance that we break out, and I don't want to take that risk. I already take some TP, and I don't want to be again overexposed here. So this is what I think already. I have here on my left screen the dollar index, so I'm still looking at the chart. I can also take some another TP here maybe. No, I think I'm fine. I have a good exposure already. I have 4 lots in euro, 4 lots in pound. Okay, and here we started to, yeah, not enough for me to attract a good price here. Yeah, yeah, I don't want to be overexposed on the indices. But generally, when we have those type of market consolidation, it will generally help bring down. That's what I want already. I want that this structure here breaking down in the top, in the downside, attracting here a buy position. If it goes to the upside, I don't like to play the breakout, and it will be without me for that trade. But yeah, we see that it starts to create, at least on the H1, this type of big uptrend already. And actually, you see, we are at the middle of the range. Okay, we are at the middle of the waves. It's actually the middle. So I don't want to be overexpose myself into the middle of the range. The risk reward for me will not be good enough. If the market goes back here, okay, we will be also touching the bottom of the range. Okay, so this is also an interesting spot for me. But that's fine. See, the market go without me, so I will be continuing the trend, and I will be waiting the market to go down to attract a better price. Fair enough for me. Yeah, and the dollar index from here start to very short time frame on the M1, starting to push down a little bit. We should be patient. The market only opens in Wall Street, so yeah, we should be patient. I believe that if we see the S&P are actually moving up here, we're going to see the dollar index moving down. It will be very interesting to get the correlation between the dollar and the S&P or the Nasdaq. Let's say the S&P in the last 2 months or 3 months. I think there is an important negative correlation. So when the dollar will go down, the S&P will move up. what is my idea of partial profits and move to break even. So it depends of your plan, okay? I believe that taking partial profit is important for the long run, okay? You cannot expect to have a huge win when you open one trade, okay? You should have your plan. My plan, first of all, was to open a buy position here. That's what I did, and taking some profits on that testing zone, okay? It was a support before, so I will take some profits according to lower time frame zone. Generally, that's what I did, and I will move the stop loss to break even when I already took some TP and when I believe that the market will not go back. Actually, okay, moving the stop losses to break even, you must have a good timing for doing that, because if you move the stop loss to break even and the market didn't push enough, okay, you will get out by your stop loss and then the market will continue without you, okay? That some traders are doing that. For example, here, okay, it's the M5. I was already long here, okay? I buy 2 here, I buy 2 here, I add another lot actually here. Some traders will like wait this push and say, okay, the market already pushed enough, I will move my stop loss to break even. And you see the market get down, make 3 tests and then move above. So you should be very patient and wait the good time and the good moment to remove your stop loss to break even. And for me, you see this breakout here was the signal for me that, okay, the market will probably continue, and that's the moment I took my TP, and that's the moment I also removed my stop loss to break even. Of course, I had also on the dollar index on my left screen, you know, the fact that the market tripled top on the short time frame. Okay, if I go to the 15-minute chart in the dollar index, you will see quite the same. Okay, you see that. Okay, so 1 touch, 2nd touch, 3 touch, and then the market is starting to get down at the opening, huge movement, and then I remove my stop loss to break even. So the timing to remove your stop loss to break even might be and should be very important in your case. Okay, so the S&P moved without me. Yeah, there is huge chance that we make a new high. I was thinking of touching 4,000 levels in the S&P the beginning of the week. Actually, you see, we enter in the range that we had previously. I think the main resistance that we have is the top here on the pound, on the euro dollar, sorry, and same on the pound. You see on the pound on the 30 minutes we have this huge resistance spot, which might be again very difficult. We might have some retest. I believe that there are a lot of traders short at that spot, so yeah, might be a good battle. But for that, I have the dollar index on my left side, have the S&P on my right here. This will bring me enough information for me to understand if I should exit more TP at the top or not. Or even here, you see guys, even here I already get back to the average price on my Bollinger Bands. Let's check what's going on M5 on M1. Yeah, healthy movement. It's a very healthy movement. The fact is on M5 we are actually starting to cross on stochastics, so the market can stand here for a few more minutes. But yeah, the S&P is starting to continue pushing. Yeah, this one is an important zone as well, guys. Didn't look that before, but yeah, I put a line, I think. No, is that a line? zone we have. It was on M5. Okay, on M5 we have this spot here. You see, so breaked out, we touch multiple times that spot, we breaked out, and then actually we start to make a retest, okay, to that spot. Yeah, this might be a short, for example, in the short term for the S&P. Again, I won't go against my plan. I want to buy on the S&P at a better price. I should be waiting for that. Yeah, the S&P is rejecting here. We're going to see also some rejection on the pound and on the euro. This is stochastic starting to cross. Let's wait for the momentum. You see, it's very like the dollar and the stock market is behaving quite the same. You see, it's quite interesting. It's the 15-minute chart, and if I go to the 15-minute chart, see guys, or the pound dollar, for example, and or the euro dollar, you see it's very, very similar. So it's quite amazing to have this, let's say, correlation between the euro dollar on the S&P, but for something more global, I would say negative correlation between the dollar and the indices, especially S&P. I probably believe that in the Nasdaq it's quite the same, but on the S&P we see that very clearly. Okay guys, this was an interesting session, very long session, maybe not long, 45 minutes, it's quite the average. But you know, I've been focusing on my plan, about what I said on Monday. Still very ready for any news we have in the market that will react and bring some good movement into the market. So I'll still be trading, continuing managing my trades. And again, this was an interesting session. So thank you for the people that stayed with me until the end. And again, guys, I know that sometimes I bring some fundamental and, you know, let's say a fundamental view that may be a bit advanced for some people. So yeah, I'm very happy to get sometimes some questions on the chat. I very appreciate those people that interact with me, and also people that, you know, focusing and viewing that live with me, guys. So yeah, I wish you actually a nice trading day. We will meet each other on a Monday for the next weekly forecast.